Hello and welcome again to MarketTamer.com. This evening we'll take a look at the Nasdaq, and specifically we'll try and forecast where we believe the Nasdaq is headed. We spend a lot of time usually looking at the S&P 500 with good reason. It's the representative index of the market. But the Nasdaq is also interesting to look at with such a heavy weighting of technology stocks. And if we take a look at this chart, there are a couple of interesting aspects to note. First one is down here, looking at the stochastics. We actually see that for some time now, the stochastics have been in that overbought region above 80. We also see that this downtrending line here is the 200-day moving average. And the Nasdaq has started to approach it. It's almost on the verge of running into it. It will be very, very significant if it can stay above that for any protracted period. Based on past history, obviously we see it's blipped above, but certainly has not remained above. And again, that would be our expectation here, that the Nasdaq is most likely not going to make a substantial run from its current level. With that said, it could certainly stay in a bullish pattern. Obviously, if we look short term, that's what we see. We can see a 20-day moving average here, and the Nasdaq has hit that a number of times, bounced off it, and continued higher. So in the short term, we're bullish. Long term, obviously, we're still in a bearish pattern. And until the market actually proves that we should believe opposite, there's no reason for us to predict that this bounce is anything more than a bounce within a bear market. One of the reasons, over and above just simply the mere facts dictating that to us, is we just can't see any fundamentals out there which are overriding our decision. So with that said, we'd fully expect that within the next probably 10 days or so, the Nasdaq will start to plateau and potentially we'll see a reversal. But we won't go out on a limb and actually predict what that will look like until it happens. All we know for now is we're short-term bullish, long-term bearish. And if we were jumping into short-term positions, we would be very, very cautious right now. Coming up after a substantial bounce, you can see the initial bounce is very, very sharp, and then we start to peter out here. And if we start to plateau around this level, that will be danger signs for the bulls. And as a result, no reason to get too aggressive right now. In fact, we had a recent video on being patient, and this is one of those times. We can just sit back, wait for the inflection, and if we turn over, then we can capitalize to the downside. Or alternatively, if we can remain above this 200-day for an extended period, then we'll be feeling much more positive, but that's not the case right now. Another interesting chart here is that of gold, and I've brought this in simply because it's starting to look a little toppy here. We're not seeing good action. Certainly there's a lot of bullish bias in the media about gold, but we're seeing now really a downtrend here in the recent months. And really, I would say that there's a lot of reason for caution at this point in time on gold. Some of the gold stocks are not doing terribly well either. So although there may be overarching fundamental reasons to suggest gold should be going higher, the pattern is not dictating that we should be extremely bullish right now. And again, it's up to the market to prove itself to us. It's not for us to try and get ahead of the market. So with that said, we'll look forward to seeing you in classes during the week, and we wish you all the best, and enjoy the rest of your weekend.